Hi everybody, welcome to another update on the stock screener. Our next lithium mine is Core Lithium. It has dropped by 60%, not sure why. Is it a buy at this level? We will see. But before I talk about that, I need you to know that lithium is probably going to go down. There is too much supply and the cost of production is very low, so more supply will come in the coming years, and that's very bad for the lithium price. So that's why I use these prices here. We are currently at 3,000 per ton spodumene. It's going to go to below 3,000, then 2,000, and eventually I think 1,500. Okay, Core Lithium. Why is it down 60% and is there upside? So enterprise value is at 400 million US. They have some cash now, 100 million. They did a private placement. And yeah, I have subtracted that already. So they're going to use that money to do some early works on their mines, plant optimization, studies, exploration, etc. So a lot of capital, 100 million Australian dollars. So that's this capex here. So what is this mine actually doing? So actually this is not just one mine. They have an open pit which is only going to last 2 years. Yes, 2 years only. Then they are going to go underground for 1 year. Maybe they can expand this, but that's what the feasibility study says. And then they have the BP33 underground, which is going to be another 2 years. Then another underground mine, another 2 years, and then the Hangong open pit, which is also another 2 years. So this is a very troublesome company because it's not one mine, one open pit. It's several open pits and underground mines that need a lot of capex to be built. And you can see that this is the capex here. All of these mines have non-sustaining capital, and you need to add all of these capex into the NPV calculation. The production, however, concentrate production is typically the same, 190,000 per year, and then going down eventually. So not a lot of mine life, according to the feasibility study. It can, of course, always be expanded, but it's not like this is going to grow double or triple like Pilbara Minerals or Sigma Lithium. This is going to go down in production. Take a look at the grade, 5.8%. Take a look at the production, 200,000. Now, what did they deliver? This is the last quarter, only 5%. So not 5.8, only 5%. So that's already bad. And they only produced 60,000 tons. And they were supposed to produce 200,000 tons. So why is it cut in half? The recovery, 70% recovery in the feasibility study, and they only delivered 50%. So not good. That's from 70 to 50. Let's say it's almost cut in half. And with this grade as well, so that's why it's down even more. So they did not deliver on their production of 180,000, 170,000. It's only maybe 60 to 70,000. So we need to calculate with 60,000 now instead of 150, 180,000. I mean, it's just half of it, half of the feasibility study. Of course, it can be improved, maybe, but we don't know yet. I will assume the worst and keep it at 60,000 forever. Costs are also up. So they said that the cost would be $300 to $400 per ton, and instead we get $600 per ton, right? 600. You can see that here C1 costs 900 Australian dollars, and here it's only 360 US. So when you calculate that, it's around 600 US right now. So the costs are higher, the grade is lower, the recoveries are lower, production is lower. This is why this company has crashed by 60%. They are not delivering. Also take into account there are royalties. Royalties are about, I think, 5%. So they need to pay royalties to Lithium Royalty Corporation, 2.5% of revenue. And here, Northern Territory, also 2.5%. Just take 5%. So royalty is incorporated in the revenue here. Tax rate 30%. Income tax 30%, so I took 30%. CapEx, that's the CapEx that they will need. 20 and 50 million I took because there's still a lot of mines that need to be built. 60 million, 50 million, so it's about that amount. As I said, this is not one mine, these are many mines. Okay, what do we have more? Mine life only 8 years. So, yeah, net income is calculated by revenue minus costs. They do not have a lot of debt, that's good. Revenue and costs are calculated like this. Spodumene price, I took 5 divided by 6 because it's only 5% instead of 6%. So even worse. Yep, and this is the net income that we get. Not a lot of income. 20 million, maybe. Because lithium is going to go down eventually. So 20 million in net income per year. And what is the enterprise value? 400 million. So this is completely overvalued. PE of 20, absolutely not viable. And who knows what they are going to do with the underground. That's a very difficult mine to build. It's not an open pit. So yeah, this is not an easy mine to build. And they also have problems with the weather, a lot of rain. So that could also decrease production. And when we look at this valuation, it's not good enough. It's actually completely overvalued. 400 EV, and it will never get to the enterprise value. Right? 10% discount rate over these cash flows. You only get 100 million US. And the enterprise value is 400 million. So I see more downsides for core lithium unless they can get the production up. Okay. If we just go by this spodumene concentrate production of 60,000 per year, that's not good enough. Let's say they increase the recovery and grade and all of that to maybe next year it goes to 100,000. Let's see what happens then. Okay, then it's a bit better. If they can get the production up to the feasibility study levels, which is normally 180,000, 160,000 at a grade of 5.8. So yeah, the trouble with this company is that they are not delivering on their feasibility study. If they do deliver, then this has upside. But yeah, you need to monitor this continuously to see if they can do it. So currently I am not interested, even if it is down 60%. Okay, that was the video, and I'll see you in the next one. Bye.